And we are watching shares of Western Alliance rally today. We were talking about that just a minute ago, helping sentiment within the regional banking sector after the bank provided an encouraging update on its deposits. Bank executives, though, have been on edge. And with the debt ceiling uncertainty in Washington, leaders of the biggest institutions, such as JP Morgan and Citigroup, meeting with the Senate Majority Leader to discuss the D.C. debate. Let's bring in Sheila Bair, former chair of the FDIC, a senior fellow at the Center for Financial Stability and author of the New York Times bestseller, By the Horn. Sheila, it's great to have you back with us. And obviously, we've shifted from this story around bank turmoil to whether or not the U.S. is going to default, and bank executives making their case today. How have you been watching these moving parts?
With sadness and despair, why we put ourselves through this is a global embarrassment. No other country does this. Actually even entertains the notion of defaulting on our financial obligations. So, but I've seen it so many times. At the 11th hour, they will, reach an agreement. The problem is, people are scared. I'm getting a lot of emails from people. What about my T-bills? What am I going to do? It really creates a lot of anxiety on Main Street. And so, while both sides are right, the Republicans are right. We need to reduce spending. We are on a financially unsustainable path, but the Democrats are right. You should never be toying with the idea of defaulting on the debt. Unfortunately, that's what's going on. That's what's going on, and will probably go on again. But I have a lot of confidence they'll reach an agreement at the 11th hour. And there's been some pretty good news reports lately that have been encouraging.
And we saw the market pop on some of those headlines. We mentioned that regional bank stocks moving higher today, just really on the back of some deposit updates from Western Alliance. I mean, the markets, they like to simplify as much as possible. There's nothing simple about the interconnected world of banking. But for those who think some of those worries that were front and center just a few weeks ago, is the situation looking better to you these days?
So, yeah, I think it was always overstated. The two failures that caused all the drama, Silicon Valley and Signature, were outliers, especially Silicon Valley. They were idiosyncratic issues. The broader banking system is quite fine. Regional banks are quite fine. That's not to say there won't be a few more getting into trouble. There will be. But, banks fail. We have 4,100 banks in this country, $23 trillion system. Sometimes banks fail. That's why the FDIC is there, to protect the insured deposits. And they will protect uninsured, too, if they can find a bidder to pay to cover them as well. This is what happened with the most recent resolution with JP Morgan Chase coming in. So, I think it's fine. And people shouldn't worry. Just like I wish they wouldn't have to worry about the debt limit. But right now, I think that's more front and center than regional bank health.
Yeah. Do you think inevitably we're going to see more big we're just covering here in Canada, TD not getting to the finish line with a big acquisition. And there are some particulars behind that one. But do you think it is inevitable that we will see some of the larger banks just get bigger in light of the fact that you've got so many banks that have to be regulated, and it's a lot of work?
Yeah. Well, it was a bit jaw-dropping when First Republic got sold to JP Morgan Chase. But, the FDIC is subject to least cost resolution. They have a bidding process. They take the best bid. JP Morgan Chase was the best bid. That happened during the great financial crisis. It's going to happen again. Yes, there's going to be more consolidation. I do think, though, that it's important for the FDIC and the regulators to work together to have as broad a net as possible of competitive bids, including regional banks. It's much better for one regional bank to be sold to another regional, even if it's a large regional, than these mega institutions we have in the U.S. So again, if they're the best bid, the FDIC has to take it. Power to Jamie Dimon. He's a smart guy. He knows how to bid. He bought a bank, WAMU, during the great financial crisis, a thrift. But yeah, I think another thing they can do to try to stem this trend towards consolidation when you get into financial uncertainty is to have a temporary deposit guarantee on transaction accounts. That's something else we did during the great financial crisis. We could do it then on our own. Now Congress has to authorize it, but just to stabilize those transaction accounts, those business accounts that businesses use for operating expenses, they're almost always above the insured deposit limits. Very important to the health of the regional banks. So that's something Congress could do to stop that, because now quietly I think a lot of that business is migrating to the very largest institutions, and that's not helpful. We need a strong regional bank system in the U.S.
The markets move very quickly, and obviously we've seen that impact these various banks. sometimes it's people with a click of a button on their phone, just in terms of their own deposits, but sometimes it's piling in with bets against bank stocks. And that has sort of brought up this conversation around an issue like short selling. I wonder, does a healthy system eliminate short selling from the equation?
Well, short sellers have always been around. We had a problem with them during the great financial crisis as well. I think short selling plays a function in our markets. It plays a function with price discovery. The problem is when there's manipulation going on, when people are short and then go off without disclosing that and tweet something negative and untrue about, a company where they've shorted the stock. That's the kind of thing I fear has been going on to some extent with the regional banks. The SEC really needs to crack down and investigate that. But I do think it's important for people to understand a bank's share price really has nothing to do with a regulatory decision about whether it is insolvent and needs to be closed. Those are two different things. So what the market's saying on a particular day about a bank's share price doesn't really have anything to do with its underlying financial health, as would be evaluated by regulators. So that's, again, depositors should keep that in mind.